Welcome to this explainer. Today, we're tackling a massive, multi-million-dollar problem. Why do so many everyday investors just fail? Honestly, it usually boils down to one fatal error. They rely on just one single dimension of analysis. So we're going to completely rewire how you look at the stock market right now. So, the million-dollar question: how do you actually find these undervalued companies? And more importantly, how do you do it safely? We're talking about finding what the pros like to call sleeping giant stocks. Those rare companies quietly sitting there worth 2, maybe even 5 times their current price, way before the rest of the market catches on. It really all comes back to the absolute core philosophy of value investing. Benjamin Graham, who, by the way, is the guy who taught Warren Buffett literally everything he knows, summed it up perfectly. He said, buy $1 worth of stuff for 50 cents. That's it. You're just looking for an asset the market has temporarily mispriced, and you're buying it for significantly less than its true intrinsic value. But, how do you actually find these 50-cent dollars without losing your shirt? Well, this is where the FTP method comes in: fundamental, technical, and personal analysis. Okay, I want you to picture a 3-legged stool in your head. All 3 legs are in place. It's rock solid. Remove even one leg, it falls over every single time. The crazy thing is, most investors use only one leg, and then they wonder why they keep falling flat on their faces. All right, let's dive into leg 1, fundamental analysis. Fundamental analysis is what builds the absolute foundation of our investing stool. It's all about looking under the hood and examining the financial DNA of a company to evaluate its true intrinsic value. Basically, before you invest a single dollar, you have to ask yourself, is this actually a truly great business? And we figure that out by meticulously reviewing the big 3. We're looking at income statements to check profitability, balance sheets to make sure they aren't, completely drowning in debt, and cash flow to verify the money is actually real. What you really want to see here is positive, consistent growth. So crucially, fundamental analysis definitively answers one specific question: what should I buy? It essentially filters out all the junk and leaves you with a pristine list of those high-quality sleeping giants. But here's the catch, and it's a big one. Knowing what to buy just isn't enough. Seriously, even a perfect, debt-free company, if bought at the exact wrong price, can absolutely lose you money in the short term. Which brings us to the next piece of the puzzle. Leg 2, technical analysis. If fundamental analysis is the what, well, technical analysis is the when. It is entirely focused on timing and price trends, making absolutely sure we don't just buy a great asset, but we buy it at the precise right moment. You really have to respect the trend here. To figure out this optimal timing, we basically track where the smart money is moving. We rely on tools like charts, moving averages, volume profiles, and momentum indicators. We're using all of these to spot those hidden patterns that signal a mega trend reversal. Ultimately, this second leg answers the vital question of when to act. It tells you exactly when the broader market is finally starting to wake up to that sleeping giant you've already discovered. And that brings us to leg 3, personal analysis. This is the third and honestly the most overlooked leg of our entire stool. Personal analysis involves reading human psychology, both the market psychology and your own. Think about it. When the market crashes and literally everyone else is panicking, are you calm enough to step in and buy? That requires immense discipline. We use real-world signals from our daily lives to build that conviction. It could be something as simple as noticing a packed restaurant during an economic downturn, or seeing the lipstick effect in action during a recession. It's really about measuring the greed and the fear of the masses to back up what your data is already telling you. So this final leg answers exactly why the market is mispriced in the first place. It gives you the courage to step in right against the crowd because you actually understand the psychology driving all their panic. Basically, you know something they don't. The magic number here for sure is 3. Every single investing decision you ever make must be strictly filtered through all 3 of these lenses. I mean it. Great company but a bad chart? Skip it. Great chart but a bankrupt company? Pass. Great company, great chart, but you're buying purely out of FOMO? Stop right there and reset. Here's a pro tip. Definitely bookmark this FTP framework. If you build a fully assembled 3-legged stool, you will completely change your odds. If any one leg is missing, you are taking a totally unnecessary risk.
You always want to ensure the upside heavily outweighs the downside before you ever put your hard-earned capital on the line.
So, as you take a look at your own investing strategy today, I'm going to leave you with this final, really crucial question. Which leg is currently missing from your portfolio? Fix that missing leg, and you know what? You might just find your very first sleeping giant.